The only folks that can complain of a possible rules violation are the ODFI, the RDFI, and Nacha. One of the things that Nacha does is randomly, they go out to ODFIs and RDFIs and say, hey, can I get a copy of your audit? And it's not really a copy of your audit. It's, I need proof that you completed your audit. So during Nacha's quarterly ACH rules compliance audit outreach, Thurman Bank was requested to provide proof of the bank's annual ACH compliance audit. Thurman Bank responded to this request and indicated that it had not performed an ACH rules compliance audit for 2 consecutive years.
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Hi, welcome to Wrestling Payments. My name is Joe Casali. I'm your host. Welcome to the third installment of our Nacha Smackdown, rules violation in the ring. We're going to talk about rules violations and what to do when they have them. If you don't realize, Wrestling Payments, we try to smash together. It was fun. You know, it's cute. Let's make it Wrestling Payments because I love wrestling, professional wrestling, and I love payments. So we smashed them together and I have a little trying to make this one like a in-ring experience. But I stumbled across a rules violation by mistake. I was searching for ABLE payroll, and it actually just found the first ABLE in the book. And we're going over the Nacha system of fines, rules enforcement case studies, document available to NEACH members. Please contact the customer service to see if you're a member and can get access to that. But I stumbled across a case, but I thought it was really great. So here for the first case in this episode is a bonus issue. So this one is commercially reasonable fraud detection of microentries. That's what this one is. It caught my attention. I thought it was a great case. And then I realized, oh, that's not the one I'm supposed to be doing, but let's cover it anyway. So here's the claim. The claim is BWGR initiated an excessive number of microentries to invalid accounts. So microentries, if you're familiar with those are little under $1 entries to try to verify the account number of the receiver. So RDFI Creed Savings and Loan received over 2,700 invalid microentry transactions to 3 accounts from ODFI BWGR Bank and its originator, Havern, Havern, Billing. Creed Savings had been receiving thousands of fraudulent invalid transactions containing the entry description, account verify. That is the valid label for a microentry. The transactions were returned as RO3, no account unable to locate, or RO4, invalid account number structure. After unsuccessfully addressing the issue directly with the ODFI and its originator, a rule violation was filed. Okay, so this is bad, right? This is just, if you're in the ACH, you learn the rules, you try to follow the rules, you hear things like this and you go, what? And, where's the harm here? You may be saying to yourself, oh, they returned them. There's no harm. Do you know how much time it took to return 2,700 entries? Not okay. There's a cost to that. Okay. So this is why I was interested in this case, because you can be part of a rules violation where you get to respond to, you deny it or you accept that you've violated the rules, and what are you going to do to try to fix it? So in this case, BWGR Bank acknowledged the violation and stated that several attempts had been made to resolve the underlying issue. Wow. So wait, you did something about it. And here's what they did, right? So remember, we're talking about microentries. These guys were working with their originator to say, hey, let's try this. Let's try this. Let's fix this. Let's fix this. Here's the list of things that they tried with their originator. Maintain a comprehensive set of risk controls during onboarding process. Implement limits on the bank add and usage at various levels. Who can do that? Who can add a new entry to prove an account? Who can do that? Block email domains commonly exploited by fraudsters. Implement daily monitoring to assist in identifying and deactivating fraudulent accounts that bypass controls. Implement robust internal monitoring systems specifically designed for anomaly detection related to high velocity, right? They're all going in the same account, microentries. Create a dedicated team to investigate and ascertain the nature and extent of the anomalies detected. Block routing numbers being targeted by fraudsters. Deploy 2 major risk controls which significantly reduce the number of fraudulent bank additions from the double digits to single digits. So they were seeing progress internally. Set up scanner and deactivate threats daily. Worked on developing a long-term solution, which is a model-driven payment instrument validation service. This would dynamically enable the ODFI to control these types of risks. And finally, they disabled microentries, implemented a new commercial account verification system to verify bank account details. That was a lot. This ODFI was really trying. This customer must have been valuable to them, but they were really trying. So here's all I did. I throw myself on the mercy of the court. And remember, the court isn't a person at Nacha. It is a rules enforcement panel. And the panel looked at it, and the ACH rules enforcement determined the ODFI had committed a Class 2 rules violation due to the excessive harm caused to the RDFI. Again, I said that earlier. I did not read that. I said that earlier. This was a lot of work. There were people going through these entries every day to return them. It doesn't matter that they were 25 cents or 35 cents. The review process, the returning process, all takes time, effort, and money. And did they face a fine, or did they get their hand slapped? A fine of $5,000 was imposed against the ODFI. So they can add paying fines to Nacha to their list of things they try to do to fix this problem. And I stumbled across that by mistake because I was looking for Able Payroll, and Able was one part of the title of this one. But it was so interesting, I had to read it. All right. Let's get back to wrestling payments. What's the fun stuff? Oh, this one's a tough one. This one's a tough one. Not really going to like this one. It's just sad, but you're not going to like this one. It's a good one, but you're not going to like it. All right, so let's talk about it. We're going to talk about the case of entries to invalid accounts. Here's the claim. The claim that Kinley Bank received a notice of possible rules violation related to its originator, Able Payroll Processing, for initiating an entry to an invalid account at the RDFI. Invalid account, sending entries. They're bad entries. If that happens more than once, it's a possible rules violation. You get one, well, I guess, there is a statement out there. I forget who told me, but even one entry to an invalid account is a potential for a rules violation. So you have to do due diligence on the account numbers before you send these transactions. And again, at the end of the story, you're gonna say, "Oh no!" And again, it's a real story. This really happened. Okay, background. After consulting with Able Payroll Processing, Kinley Bank acknowledged the rules violation and stated that it had resolved the issue. Okay, we resolved it. We acknowledge it. We did it. We're going to throw ourselves on the mercy of the court, and we did it. Nacha received additional reports of violations from the RDFIs related to the same rule infraction and escalated the issue with Kinley Bank via notice of possible rule violation. So they got a rules violation. Kinley Bank said, yep, we did it. And then they got more rules violations from other RDFIs with the same problem. Knowing the rate at which RDFIs file rules violation, which is slim to none, it must have been a really bad problem for multiple RDFIs to respond to the same issue. So discussions with Kinley Bank revealed that Able Payroll Processing had substantially increased their client base. Good news, right? Right. Resulting in a significant growth in its origination volume. Good for the payroll processor. Great job. The bank reported that a systemic issue occurred when Able payroll processing system couldn't handle the increased volume, triggering, this is what happened with their systems, incompatible routing and account information. Simply said, all the records that said, here's where we go for the funding, I know it's the funding. They were going for the funding. So the debits to the corporate accounts for funding of payrolls, the database slipped. So imagine that line 1 of the database has the routing number of the first to be debited. It slipped and it was using the third, the fourth, the fifth, whatever account number. So the account numbers and routing numbers weren't real. They were all mixed up. So that went to the panel. It was, they were growing. There was a lot of activity, updated the database, all that going on. The ACH Rules Enforcement Panel reviewed the issue and determined that, regardless of the internal systems issues, the originator and its ODFI are still responsible for the accuracy of the account information. Fines. As the violation submission had escalated to Class 2 status, the financial institution was subject to a fine between $0 and $100,000 per month until the issue was resolved. So for the folks who are just tuning in and we didn't talk about the classes, a Class 1 rules violation is a Class 1 rule violation that says, 1, don't do it again. We're not going to fine you this time, but don't do it again. A recurrence would be $1,000. A second recurrence would be $2,500. A third recurrence would be $5,000. So they had already gone through all of those fines already. And then now we're sitting in the Class 2 space of a rules violation because it happened again. The Rules Enforcement Panel decided to impose a one-time fee or fine of $20,000. That's a big fine, right? This is a part of the growing pains. And I can tell you, if the rules enforcement complaints still came in, they would be facing that next month too. So all of this is important to understanding what business your customer is in and what they're doing. In our final case, our final match of the series talks about the audit dodge. The audit dodge. Okay, this is failure to perform ACH rules compliance audit. We're going to be talking about Thurman Bank failed to perform the annual ACH compliance audit. Okay, so this is if I haven't covered this in the series at all, the only folks that can complain of a possible rules violation are the ODFI, the RDFI, and Nacha. One of the things that Nacha does is randomly, they go out to ODFIs and RDFIs and say, hey, can I get a copy of your audit? And it's not really a copy of your audit. It's, I need proof that you completed your audit. So during Nacha's quarterly ACH rules compliance audit outreach, Thurman Bank was requested to provide proof of the bank's annual ACH compliance audit. Thurman Bank responded to this request and indicated that it had not performed an ACH rules compliance audit for 2 consecutive years. Again, as I mentioned in the last episode, there is not an AAP on staff here. That is a bad thing. That's a bad thing because of my next line I'm going to read. Failure to perform an annual audit constitute a Class 2 violation of the Nacha operating rules. You don't get to go through, oh, you didn't do an audit? Great. Do it next time. We're going to slap you on the wrist. They go right to Class 2, $0 to $100,000 fine until the problem is fixed. So Thurman Bank was sent a notice of possible fine related to the violation. Thurman Bank acknowledged that the violation and stated it had lost sight of the audit requirement. The bank had been written up during its annual audit for the lack of ACH compliance audit. So their regulator had said they hadn't done an ACH audit. Not okay. The bank had scheduled the ACH audit with its payment association and would maintain the required annual schedule. Wow. So, an annual audit is a pretty easy thing. You just schedule it. It gets done. Typically, it's done by an outside party. Typically, it's done by the same, if you're doing your audit with your association, you're probably doing that every year. These guys, staff change, people change, new system, a core conversion, whatever was the case, they lost sight of their audit. So that is a class 2. Not only did they lose sight, they showed up on the random quarterly review by Nacha. So that was it. So what did the panel decide? So the ACH Rules Enforcement Panel determined the financial institution had committed a Class 2 rules violation. If you remember that rules violation, it can be anywhere from $0 to $100,000 per month until the problem is fixed. The ACH Rules Enforcement Panel decided to impose a fine of $5,000. These are the easy things. I think I have one more case. I do have one more case. So that was an easy $5,000 not to face by just completing your ACH annual audit every year. Let's find the last case, which is really another really easy thing to do, but let's find it. Hold on, I'm going to search. Okay, that's good. Let's search for that. Oh, why didn't I find it? Try it again. All right. Pause this. Alrighty, we found the cases, and this is a twofer. So this is a loaded episode. It has an extra case. It has 2 cases in one. Let's talk about the case. So, in the ring, we have a failure to register third-party sender status. If you're not familiar, if you have a third-party sender, you must register them with Nacha. It's an easy process. Nacha has built a database. It's a really, really functional and good database. Gives you the ability to report third parties and nested third parties. So let's talk about case number 1. And remember, this is a double feature. So Corner Bank received a notice of possible rule violation, a Class 2 rules violation for failing to register their third-party sender status with Nacha, which was to be completed by March 1st, 2018. This is the primary registration that said, I have them, I don't have them. They didn't do anything. So background. Well, I think they didn't do anything. Let's see what the background says. Corner Bank denied the violation, stating it had fulfilled its obligation to Nacha when it registered its direct access participation in 2010. Notice the words were direct access and not third-party sender. They both did include registration, but that's where it stops. Staff reached out to Corner Bank to explain that the registration performed in 2010 was strictly related to the financial institution's direct access status and did not address whether or not the financial institution had any third-party sender relations. If you're unaware, direct access is a relatively risky but manageable thing. It is the idea that you're an ODFI. ODFIs usually are in the position to send files to the Fed or the clearinghouse to originate ACH transactions. In some cases, they've given that ability to a third party to originate their own entries. So you've got a situation where the third party sending entries that the financial institution may not know about. That could be a problem. So Nacha was aware of that in 2010 or before. There was a movement to register third party direct access so we could identify how big is the problem, put in some controls that say, hey, you got to know what they're doing. You got to do your due diligence. Report to us if they're doing stuff that you don't know on a quarterly basis. But that is not third-party sender registration. There were 2 different things. And Nacha explained that. Staff also explained that the reference to third-party sender was only in relationship to whether the direct access participant was a third-party sender. If the financial institution indicated it did not have direct access participants, that did not identify to Nacha if it had third-party senders. So in this case, say they had a third-party sender in 2010 and they didn't have direct access. They said to Nacha, nope, we don't have any direct access participants. That didn't indicate whether they had a third party or not. Nacha has no idea, didn't know. So kind of a problem, definitely a confusion. Let's see what the panel concluded. Nacha refuted Connor's Bank's denial because it had not performed the required registration by March 1st, 2018. Easy peasy, they didn't do it. The ACH Rule Enforcement Panel determined, as no other financial institution or consumer was impacted by this rules violation, and the overall goal is compliance with the rule, the fine amount should reflect that. So what was the fine? Again, reminder to everyone, a Class 2 rules violation, the financial institution could be subject between $0 and $100,000 per month until the issue is resolved. They were issued a one-time fine of $500. Wasn't imposed against Connor Bank. So I imagine my next episode or my next case is going to be similar. Let's see. Yes. Very similar. In fact, it has the same title, Failure to Register Third-Party Sender Status. Okay. The claim. I have a different institution. This is a different case. So starting right at the top again. Bettis Bank received a notice of possible rules violation citing a Class 2 rule violation for failing to register its third-party sender status with Nacha, which was supposed to be completed on March 1st, 2018. Great. Background. Okay, so Bettis Bank denied the violation. So another organization that denied the violation. Why did they deny violation? And I can tell you, it's a positive, if I recall correctly, it's a positive acknowledgement. It's we have them or we don't have them. It's not we didn't respond. So let's see. It was unaware of the registration rule and the March 1st, 2018 deadline. Oh, well, if you didn't know about the rule, that must not apply. Sorry. Sarcasm. In addition to yearly audits, the financial institution had just gone through an FTC examination where there was no discovery of being out of compliance for this rule. The financial institution received Nacha rules and guidelines training and does not recall this particular rule being a topic on the training agenda. Ooh, not much more to this case. So what did the panel conclude? Nacha refuted that Bettis Bank's denial because it had not performed the required registration by March 1st, 2018. The ACH Rules Enforcement Panel determined, as no other financial institution, this sounds familiar, as no other financial institution or consumer was impacted by the rules violation and the overall goal is compliance with the rule, the fine amount should reflect that. As a Class 2 rule violation, the financial institution was subject to a fine between $0 and $100,000 per month until the issue was resolved. And once again, a $500 fine was issued to Bettis Bank for not filing their rules violation or their third-party sender registration. This is a kind of a couple of important notes here. Let's call it outside interference. Was there any outside interference? No. FDIC did their audit for their stuff. They may or may not have caught an ACH rules violation. The ACH is a thing unto itself. FDIC is a thing unto itself. You have to be compliant with all of it. OCC, FFIEC, all of it you have to be compliant with. It's hard. I understand that's hard. It's the rules are getting more complex. The environment is getting more complex. There's more bad guys. There's more vectors. But all of these individual rule bases have their own compliance requirements. Stating that the FDIC didn't tell us is probably not the best defense against this fine. Telling them that you had Nacha training, but you didn't hear this one, probably not the best defense. I think that it's, we send our members a rule book every year. If we didn't send our members a rule book every year, I would say we should send our members a rule book every year. The rules change to a great degree or a little degree every year. The onus is on the participant to be compliant with the rules. So in this case, I guess I'll just call it a good deed. Nacha was trying to improve the network. So these fines were really a little more than a slap on the wrist, but not a Class 2 full-fledged, what you could expect from a $30, $40, $50, $100,000 fine. So it was enough to say, hey, get your registration done. Keep it up to date. Really important topics. I hope you enjoyed this style of delivery. If you did, let me know. Send an email. We can do more This book is gigantic. There are cases. We've talked about rules violations in this series. We didn't talk about arbitration. So there's a whole other part of this book that we could talk about. And it's 150 plus pages. So there's a lot of cases in there. Sometimes you can learn better by applying the rules. So rather than someone sitting up and saying, hey, you got to do this and you got to do this, and this is part of the rule, and you got to have authentication and authorization, saying what happened when that went wrong, sometimes a better trainer than anything else. And as an added bonus, if you do respond, there is a whole series of ODFI return rate reporting case studies. I haven't read them. I don't know what they are. So if you're an ODFI and you'd like to know what happens if the return rates are, a little screwy. Not that we have them. We don't have, our return rates are perfect. But for someone else, what does that look like? Just a conversation between us to see what that looks like. Thank you for joining me. Your subscriptions, likes, sharing, all appreciated. Thank you, and I'll see you the next time.
On behalf of NEACH, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of NEACH.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.